Good afternoon. Happy Friday. Here is your weekly mortgage rate update. Let's see, mortgage back. I say it wrong every time. Mortgage News Daily 30-year fixed average today is at 6.35% APR. That is up from last Friday, which was at 6.29% APR. And I know you're going to say, what the heck, right? The Fed comes out, cuts the rates, and mortgage rates go up. So let's do a quick recap on why that happened. So, mortgage rates are not directly tied to the interest rate that the Federal Reserve changes, right? And that is the Fed funds rate. So, the Fed funds rate controls loans such as like a HELOC might be directly tied to the Fed funds rate because prime is directly tied to the Fed funds rate. Usually credit cards, same way. They are tied to prime, so that will be affected by the Fed funds rate. Mortgage rates, however, are influenced by a bond called a mortgage-backed security. It has its own trading system, just like a U.S. Treasury or anything else. So even though the mortgage-backed securities do take the Fed funds rate into consideration, it is not directly tied. So meaning that if they cut by a 0.25%, mortgage rates will not automatically go down by a 0.25%. So what happened, right? Fed cuts rates, interest rates go up. Not interest rates, sorry, mortgage rates go up. So what happens is the market that the mortgage-backed securities are traded in, they are more interested in the future versus what's happening today. So when I say that, they are more interested in what comments come out of the Fed meeting when they decreased rates versus actually what happened. So the mortgage-backed security market has anticipated about 3 or 4 weeks ago that the Fed was going to cut on Wednesday by a 0.25%. So that is what they already considered baked into the interest rates that you saw on Wednesday. That wasn't going to change. What they were interested in is what comments that Jerome Powell was going to say and how he was going to indicate what's going to happen with rates in the future. So the reason the rates went up is because they weren't exactly happy with what Jerome Powell said and the comments from the open market committee. All right, so he did come out and he said that he laid the groundwork for possibly 2 more rate cuts in 2025. Which is great. The market loved that. However, what they looked at after the comments was the dot plot. And this is a graph that I've talked about previously, that all the Fed governors put on their dot in at the end of the year for 25, 26, and 27, where they think the Fed fund rate's going to be. And some of those dots were higher than they were previously. And so that would indicate that the Fed governors, there's 12 of them that get to vote. Some of them don't think rates are going to be quite as low as what they thought a couple months ago when the last dot plot came out. So those two things is what the market was really, really interested in, and it didn't quite give them the certainty that rates are going to be lower in the future, whether it's 25, 26, 27. So that's why they traded. That's what happened. So now how about you and I talk about the future? What's happening next week that the mortgage-backed security market will try to figure out what our rates are going. So we have two major data information coming out on inflation. So we have the GDP, which is they still consider it, but that's a large part of the economy. All right, that's gross domestic product. That's what the whole entire country is doing versus the other world. So that one's pretty noisy. But there is PCE. That's the personal consumption expenditures, and that is the preferred measure of inflation by the Fed. So they will pay close attention to that. There is chances of it being very volatile off of those two data points. So when I say volatile, it can go up, it can go down. It depends on which way the inflation numbers come in. I don't think that they'll be very stable, right? This week, interest rates were fairly volatile because the Mortgage News Daily 30-year fixed average on Tuesday was at 6.13% APR. So you can see that information that came from the Fed really increased rates during the week. So the last couple weeks, rates have been very solid, staying at that when I say rates, Mortgage News Daily 30-year fixed average has been at that 6.25% APR, right? It's been hovering around there. Hasn't had a lot of moves, but this week. So next week, we could also have some more volatility. Again, volatility just means a change, whether it's going to go up or go down. It's all going to depend on the numbers, but there should be some movement. So have a great weekend. Fall in Montana is my favorite season, right next to summer and right next to winter. I just love the weather in Montana. I can leave spring. It's not my favorite, but anyway, have a great weekend. If I can help, let me know. Thanks.